Welcome, Denome. MicroStrategy has just issued two more investment opportunities, and in this video, you will learn exactly how those work and if they are actually a good fit for you and your investment style. Now, the reason why I'm talking about MicroStrategy is because when we take a look at the stock price, you can see that from the lows here of 2022, it has risen. The top here was almost 4,000% move to the upside, and now we're sitting at a 2,000% move on the positive side, obviously. And this is much better gains that we were able to get from just investing into Bitcoin. And also, if you only invest into Bitcoin, you also need to understand how MicroStrategy works, because they currently hold almost 500,000 Bitcoin in their reserves, and they continue to accumulate more. That if there is some risk to MicroStrategy, then obviously your Bitcoin holdings may go down in value as well. But they may also go up if MicroStrategy can pull this off well. So without further ado, let me actually explain to you both of those investment opportunities. Now, first off, we're going to talk about something called Strike. And the second one, we're going to talk about something called Strife. So those are the two new options that MicroStrategy or Strategy, which it is now called, has issued. And this all began in January 31st with the first initial batch of the Strike stock or shares. So now let me break it down to you. So Strike, which stands for Perpetual Strike Preferred Stock, they sold this at $80 per share, and they sold it roughly $500 million worth of it. And when people bought this at $80 per share, there was something called a liquidation preference of $100 per share, which means that once you bought it at $80, no matter what, you will get at least $100 back. So that is your downside protection, is this $100. So you make a minimum of 25% yield. The second thing you have to understand that is the word preferred. So this means that you get preferential treatment over the normal stock holders. So everybody who holds the normal MicroStrategy stock here, which has gone down roughly 50% from the highs, if in case MicroStrategy goes belly up and they go bust, then in the event of liquidation, you are very likely to get back your capital at $100 per share. So that is your minimum guarantee. The second upside is that you also get, while you hold this stock, you get a fixed annual yield of 8% annually. And that is based on the $100 liquidation preference price. So for your initial $80, that's roughly actually 10% yield per 10% yield per year. So it's a very, very good deal on paper, obviously, as you can understand. This is a very high yield investment product, and you have basically downside guarantee, and you will make money basically regardless of what happens. So it's a very lucrative opportunity. The second thing over here, it actually reached $563 million was the initial batch, and they, by the way, sold all of it. But anyway, going back to the story here, that was the second upside. The third upside is that you also have the right to convert your Strike to the actual Class A common stock. And the initial conversion rate is 0.1 share for the common stock. That means that once you bought it here in January 31st, where is it on the chart? Right about here. And the price of the share was roughly $333 on that day. And you bought this Strike stock at $80, the price of the common stock basically has to rise to $1,000. And if it goes above $1,000, let's say it goes to like $2,000, then you basically make you double your capital, because basically anything above $1,000, you start making money on the actual original stock, and you probably want to convert it to the actual stock instead. So those are the three upsides. You have downside protection, you have annual yield, which is, by the way, paid quarterly, so 2% per quarter. And then the third option, the third benefit is the actual upside if the stock continues to go up. Now, there are some clauses here that are worth understanding. So MicroStrategy basically can redeem all of the Strike stocks if basically 75% of everybody who held this stock option have already sold their stock on the market or back to strategy. So if there are only 25% of the holders left, then MicroStrategy can basically buy back the rest of the stocks. This is for the reason that they can replenish and they don't have any like very old stocks lying in the closets and haunting them and causing issues in the accounting. So they can basically liquidate the remaining stockholders at market value. But that's only after 75% have sold and there's only 25% holders left. And then if there are some certain tax events, which I don't exactly understand what those mean, and if there are fundamental changes in the company, this could be a bankruptcy or something like that, then you will get your money equal to the liquidation preference, which is the $100. So this is the first investment opportunity. Now, they just updated this investment opportunity, and they are currently saying, sorry about that, they are currently saying, this update came in March 10th, that they are now issuing $21 billion worth of the STRK Strike stock. So this was an important update because now they will not issue these like batch per batch per batch. They will issue these as time goes along. So you will see probably strategy acquiring more Bitcoin more often than before after they announced this what's called ATM program. But they will use this to basically get money from the investors, and they will use the money for general corporate purposes, including acquisition of more Bitcoin, obviously, and also for working capital. So it is kind of like a Ponzi scheme in a sense where new investors put in cash, they put in cash, MicroStrategy goes to the market and buys Bitcoin. And while they buy Bitcoin, the value of Bitcoin goes up. And so their reserve holdings go up as well because there's only a limited quantity of Bitcoin. That's the basic idea. And as long as this works, the idea is that they issue more stocks. And while they issue more stocks, they basically dilute the supply of the stocks, meaning that the old investors lose value. But while they do that, they increase their reserve holdings. And in that sense, that gives the company more value. So the idea is like a flywheel where they continue to buy more and more and more Bitcoin. And while they sell more and more stock that they basically create out of nothing. That's the whole idea of this move here. Now, why I call it a Ponzi scheme is because it literally means that new investors have to bail out the old investors all the time. The only caveat is that the Ponzi scheme is running with a real world asset called Bitcoin on the background. But I'm gonna get that point. I'm gonna come back to that point later on in this video. But basically, that's the whole idea of the Strike stock. Now, the second stock that they issued is called Strife. And this is completely different from Strike. This is giving you a fixed rate of 10% per year yield. But this does not give you the option to convert it into the MicroStrategy stock. This is only a yield product. So this will start on June 30th of 2025. And in the event where they are not able to pay back the dividend, then it is compounded. And instead of you getting 10%, you can basically get up to 80%, 18% yield per year. And here, this is the liquidation preference, basically the same thing as before. So you have downside guarantee, and you also get preferential treatment over the normal stockholders. So in the event where MicroStrategy goes belly up and they go bankrupt, you get preferential treatment in the liquidation of the assets. So it is again basically guaranteeing you downside protection, while the MicroStrategy stockholders are basically getting all of the risk because their stocks are continuously being diluted, and they get less preferential treatment in the event of liquidations. Uh, uh, Something else that is important here, not exactly. Now, I was talking with Grok here because I was trying to understand the whole idea for both of these assets. Now, why would you ever invest into any of these tools here? The reason why you would ever invest into these tools is basically the downside protection. Because if you get downside protection, then you probably want to give your capital to MicroStrategy, and the stockholders are just basically taking all of the risk in this scenario. But because the because the company is always accruing more and more Bitcoin, that means it is likely that the price of MicroStrategy continues to go to the upside. But make no mistake, this is a Ponzi scheme, in my opinion. Now, I probably should not say it as definitely because there may be some uh, legal hurdles. Obviously, if somebody slanders a company, then it could cause a legal hurdle. So I'm just gonna say, in my opinion, it looks like a Ponzi. So I'm gonna walk back on my words. It looks like a Ponzi because the new investors have to always bail out the old investors, and the whole thing is tied to the price of Bitcoin. So, in my opinion, this is creating the potential for Bitcoin to go to the upside. Because obviously, who wouldn't want to buy uh, these options, these preferred stock options, while there's still a limited quantity of those? But the more there are of those strike options, or strike stocks, they always have to issue this 8% annual yield. And the more they issue these Strife options, the more annual yield they have to give. There's no maturity to these new stocks, which means that MicroStrategy has to indefinitely pay this dividend to the stockholders. And that is causing a lot of risk, obviously, because in the event where they run out of operating cash, and in the event where they run out of new investors, because eventually the world doesn't have infinite amount of cash available. Eventually the world will run out of cash because this cannot continue forever, or at least willing people to put in more cash. At some point, the yield here most likely will become unbearable, and MicroStrategy is no longer able to meet this, uh, is not able to pay this dividend. And in that moment, they either have to sell Bitcoin or sell MicroStrategy stock. And if there are no buyers for the MicroStrategy stock because they don't get the preferential treatment in the event of liquidation, you can see that this will start to spiral downwards if MicroStrategy has to sell Bitcoin to substitute missing cash flow. Then the flywheel goes to the opposite direction, obviously. They have to sell their reserves, and if they sell their reserves, then the whole thing can go to the downside. That's the risk I'm currently seeing. I'm not saying it is a reality. I'm not saying it's a guarantee it will happen, but it looks to me like that is the ultimate outcome of this preferred stock offerings and all these things. So this is the financialization, financially, I don't know how to say it. It is basically making an operating company into a investing degen gambling vehicle where it only works as long as more and more and more people are willing to buy newly issued stocks. When they are no longer willing to buy more and more of these stocks, then the game of musical chair ends, and then the company crashes. So I'm saying in the medium term, or even in the long run, this can bring a lot of value for Bitcoin because we have a willing buyer who constantly wants to buy more and more and more Bitcoin. But in the long run, it will probably create a systematic risk for the price of Bitcoin. That is basically the ultimate outcome of this option here. Now, one person here on X also shared this idea here. So Adam Cochrane, he said that actually this is the original one. So he was complaining to Strategy that it's running a negative operating cash flow. It has a negative $1 billion levered free cash flow problem. And now it wants to issue $500 million of 10% perpetual interest. Now, this got a lot of likes on X, but this was actually wrong information here. And he actually corrected it because in 2025, MicroStrategy had previously already bought the outstanding debt that it had. And also the 2027 debt, MicroStrategy also bought that back as well in January. So right now, Strategy is still on solid grounds. But I'm just saying that in the future, it is just basically leveraging up its its company. And as it is leveraging up its company, when things go sideways, then the leverage eventually will liquidate everybody. So that's basically the final outcome. Now, there was one more comment that I saw here from Breadman, and he said that what this ATM program basically allows Strategy to do is that instead of them selling $5 billion worth of the common stock, because they previously just issued more and more of the common stock MSTR, and buying Bitcoin with by basically diluting the supply, now they can issue $5 billion worth of preferred stock and get the same amount of capital, but because the preferred stock is only convertible to the common stock with a ratio of 0.1, like I showed before, or 10 to 1, then they basically are able to sell only $500 million of common stock for that same amount of capital investment. So this is basically leveraging up the purchases of Bitcoin into the MicroStrategy reserves. So I think I've gone up and about already about this thing here. Some people do not see any issue with it. I do see massive red flags, especially if you're an MSTR stockholder, that in the long run, this thing will crash. But in the immediate term, it will not crash yet because MicroStrategy doesn't have a cash flow problem. But eventually, it most likely will have a cash flow problem, and then it will have to start eating up the reserves. Anyway, that's it for this update. And below, obviously, you can use my affiliate links. I am affiliated with Bybit if you want to trade these markets. If you want to short, long, use copy trading features or any kind of features, Bybit.com has your back. But that's it for the video. Thanks for watching. I will see you on the next one, and bye-bye.